Welcome to my YouTube channel and please subscribe my YouTube channel. What is credit? Credit, this perhaps has more than one meanings in finance, but most people think of credit as an arrangement in which the borrower bonds money for the lender and then pays back the lender the money along with interest. Credit can also mean a person or business ability to pay back debts on credit history. A change of a company balance sheet lowers its costs or raises its liabilities or equity. How does credit function? Credit is a relationship between a borrower and a lender. The borrower bonds money from the lender. The borrower pays back the money at a later date along with interest. Most people still think of credit as an agreement to buy someone or get a service with the promise to pay for it later. This is what is referred to as a purchasing on credit. Credit cards are the most common way to buy something on credit right now. This adds a middleman to the credit arrangement. This adds a middleman to the credit agreement. The bank that gives the card to the buyer pays the merchant in full and gives the buyer credit so the buyer can pay back over time and pay invest. Variety the credit. Variety of credit. Credit comes in many different forms. Most people use a bank on their official credit. This group includes loans for cars, home, signatures, loan, and credit lines. When a bank lends money to a customer, it gives the customer credit for the money which needs to be paid back later. In other cases, credit can mean a decrease in debit. Consider someone whose their credit card company $1 dollar, but returns are 300 purchasing to the store. The money will be put back into the account, lowering the amount owed by 7,000. Lowers the amount owed by 700. For example, when a person uses a VISA card to buy something, the card of consent from a credit because the person agrees to pay the bank back later. Credit can be given in the form of money and other ways. It is possible to trade goods and service for deferred payment or different kind of credit. This is a type of credit in which a person gets goods or service but does not have to pay right away. When a resident take a truckload of wood from a vendor and gets billed a month later, the vendor gives the resident credit. Credit is functional accounting. In personal banking or functional according a debit in an entry that shows the money has been received on a checking account registration credit deposit and usually on the right side and debit money spent or left. In terms of financial accounting, if a company buys something on credit, the transactions must be recovered in many places on the balance sheet. Imagine that a business buys thing on credit. After that transaction, the purchasing amount is taken out of company's inventory account via a debit. This characters as assistant for the company, but the amount of the transactions is added to the company accounts payable via a crediting a liberty. Things you should be keep in mind. Most of the time, credit is defined as an agreement between a lender and a borrower. Credit is also called declared worthiness or the credit history of a company. Depending on the type of accounting, a credit can either decrease assets or increase liabilities. It can also decrease expenses and increase income. Is credit equivalent to a loan? Loan and credits are two different ways to get money. In a credit, unlike a loan, the bank gives the customer a certain amount of the money that can be used or need, whether the whole amount is used, part of it used on none of its use. What does the word credit mean when it comes to a bank? The bank credit is total amount of money that a person of business can borrow from a bank. A bank can gives you secured, unsecured debit and credit. Expectation for credit depends on the borrower's declared secure income, assist, and the amount of debit they already have. What does credit money mean? Credit money is the values credited by making claims or debits for the purchase. These claims or debts can be given to other people in exchange for their values according credit money to modern economies of often done thought functional server banking. How can you discover credit? Credit is things like how much money is left in a bank change account, bank charge account, or how much money is added to a checking amount. Credit is number of English classes you have to take to get a degree. Credit is giving honor on putting money back into an account.